Whether you're just starting out or looking to sharpen your skills, this training session will teach you how to spot high probability opportunities that will set you up for success. By the end of this video, you'll be equipped with the tools you need to confidently invest and grow your wealth. From tech giants like Nvidia, which has gained 800% since we initially invested, to uncovering hidden gems, you will learn how to pinpoint profitable stocks and make informed investments. And if you missed the bull run or your portfolio underperformed in 2024 and you don't want to repeat in 2025, I'll show you how a rules-based systematic approach will completely improve your performance. Okay, so welcome to the 3-screen setup that I use to analyze every single asset that makes it into my portfolio. Quick breakdown of the timeframes. I've got the monthly time frame in the top left, I've got the weekly time frame in the top right, and I've got the daily time frame across the bottom. What I'm looking for is multi-time frame alignment. That means I want to see all 3 time frames moving in the same direction. That for me will then mean a high probability asset. So the question then is, how do I do this? Well, currently what we're looking at are naked candlestick chart. There aren't any indicators on here other than candlesticks, and that's a really important point to start off with. Candlesticks represent price. Price should always be your number one indicator. What we then want to do is load on a number of other indicators that can help us build an edge or a picture of what direction the asset wants to move in. What we want to do is find a balance between loading on indicators, but also keeping our charts clean so that we can focus on price itself. That should always be our primary indicator. So let's start with the monthly time frame. I'm just going to expand that time frame. And as I said, at the moment, there's no other indicators on here other than candlesticks. I should also mention that we are looking at the chart of Nvidia for this training session. The first indicator that I'm going to load on here are these red and green lines that you have seen just appeared. This green line here represents the highest point of last year, and the red line represents the lowest point of last year. Now, this is one of the first indicators that I look for. Why? Because an asset that is trading above the highest point of last year has a bullish bias. So looking at Nvidia, we can see that Nvidia since January of 2024 has been trading above the highest point of last year, 2023. This gives Nvidia a bullish bias and was actually when we started buying into Nvidia at the start of this year. Now, just to give you some examples of stocks that are within the annual levels of last year. So PayPal, for example, you can see that it's currently trading between last year's high and last year's low. That gives it a neutral bias. What we're looking for is a breakout. Currently for us, that's a consolidating asset. So PayPal is not one that would be added into our portfolio until at the very least it starts moving above the highest point of last year. And if we look at SEDG, which is Solar Edge Technologies, we can see that it is trading below the lowest point of last year. I mean, it's had a terrible year or so. Solar Edge Technologies, we can see that it's literally fallen off a cliff, and that bearish momentum has taken it below the lowest point of last year. So this technically has a bearish bias and is a stock that I would not be looking to buy. If anything, I would potentially look to short this stock if that was part of my trading plan. Okay, so let's move back to Nvidia. So we know that Nvidia is trading above the highest point of last year, so it has an overall bullish bias. I'm now going to load on the next set of indicators, which are these green and red lines. These basically represent key support and resistance levels, major support and resistance levels. Now, a point to mention here is that I like to look at the monthly time frame as my primary indicator because it gives me a very clear picture of what the stock is doing, how it's performed well in the past, how it's set up right now, and what it could potentially do going forward. We can get a lot of this information purely by looking at the monthly time frame. Now, one of the first key factors I look for is how well the stock has performed in the past. So if we look at Nvidia, we can see that it has numerous periods of trends in the past. For example, from this area here, which is 2016 through to 2018, that was its first major uptrend, which was a 650% climb. We then had another uptrend here from around 2019 to the high of 2021. That's a 1000% climb. And then if we look at the current movement, which is from the low of 2022 up until the current high of November 2024, that's another 1000% plus climb. So we know that Nvidia has a history of performance, hence why it's a stock that will regularly appear in my portfolio. So a number of factors here that we're looking at on the monthly time frame. Where is it in relation to last year's high and low? Second, does it have a good performance history? Yes, Nvidia clearly does. It's also above last year's high. And then we also look at where it is in relation to key levels of support and resistance. So if you look at the current price of Nvidia, it is trading above these lines. So in a bull trend, I want to see assets above these lines, in a bear trend below these lines. And if we have these red and green lines above and below current price action, we have a consolidation. So Nvidia clearly overall is very much a bullish asset. Now, the question then is, how is Nvidia going to perform going forward? What are the levels that we want to look at? This is where round numbers come into play. So currently Nvidia is trading just below $150. If I just bring down the chart, the next round number is $200, and then above that $250, $300, and so on. So round numbers come into play when I'm looking for potential levels that a stock will move towards. So that's the monthly time frame. A lot of information to be gathered just by looking at that time frame alone. What we then want to do is start moving down to the weekly and the daily time frame to give us that multi-time frame alignment, which is when the weekly and the daily are moving in the same direction as the monthly time frame. So let's start with the weekly time frame. How do we do this? Well, very straightforward. First of all, we load on two key moving averages. The first is the 200 simple moving average, and the second is the 50 simple moving average. Now, why the 200 simple moving average? Well, the 200 simple moving average is a proven indicator of the long-term trend. We can get the bias of the asset by looking at the 200 simple moving average. If an asset is above the 200 simple moving average, it has a bullish bias. Below the 200 simple moving average, it has a bearish bias. This is a proven indicator that old school traders used to use because they had to draw charts by hand. Fast forward to today, institutions and trend followers, investors like us, we still use that same logic. So the 200 simple moving average should be one of the first indicators that you load up onto your weekly time frame. In addition to that, we use the 50 simple moving average. So we've got two moving averages here. The 50 simple moving average is a good indicator of the immediate trend direction. So what do we have here? Looking at Nvidia, we have price action of Nvidia trading above the 200 simple moving average and above the 50 simple moving average. So the bias and trend are aligned and we have a bullish stock in play here. Now there is one other indicator that we have created, which is what we call a trend filter. So if you look at the color of the bars, now you'll notice that there's three colors. We've got green, gray, and we've got red. If I just remove that trend filter for a second, you'll notice that we've got the standard red and green colors. When I load up the trend filter, you'll notice that we have green, gray, and red bars. So how do we use this? Well, very straightforward. Above the 200 and the 50 simple moving averages, we want to see predominantly green, but if occasionally there's a bit of gray, then there's a consolidation period that may be forming before a continuation of the bullish trend. So if you look at the trend of Nvidia, since it broke above the 50 simple moving average in January, it has been moving to the upside. There's only been a little bit of red here in October, which was part of the consolidation period. But overall, the stock of Nvidia has been moving to the upside, hence why we've had predominantly green and a bit of gray for the trend filter. So a very good looking stock here. And so far, we've looked at the monthly, it's all aligned. We're looking at the weekly now, it's all aligned. Above the 200, above the 50, the trend filter is green and gray, telling us overall we have a bullish stock. Okay, now let's move to the daily time frame. The daily time frame, we want it to align with the weekly time frame. Think of it as big sister, little sister. The weekly time frame is big sister, the daily time frame is little sister. Whatever big sister is doing, we want little sister to be following. So let's open up the daily time frame. So given that logic of the big sister, little sister scenario, naturally we would have the same indicators on the daily time frame. We've got the 50 simple moving average, we've got the 200 simple moving average. We've also got the trend filter, which I added to the weekly time frame. And there is one additional moving average, which is the 20 simple moving average, which I use on the daily time frame. And the reason for that is because a 20 simple moving average will often act as an immediate level of support. Think of it as a trampoline that will push the stock price higher. So let's have a quick analysis of what Nvidia is doing on the daily time frame. We can see that the current price of Nvidia is trading above the 20, the 50 and the 200 simple moving averages. As it's above the moving averages, it has a bullish bias, and we can see that the trend filter is predominantly green and gray in recent days, telling us that it's moving to the upside. There was a little bit of red here. That was during the very difficult earnings window back in July and August when big tech struggled. But when most of the media channels you were following were telling you that the market was coming to an end and it was crashing, I went on my media channels and I told my investment community, this is a time to apply patience. This isn't a time to panic and listen to those sensational headlines that are plastered all over our media channels. Instead, let the market settle, create a base, and we're likely to see a continuation of the bull run. And this is precisely what has happened since that low point in August. It's rallied to the upside, and certainly since September, it's settled into this nice clean trend where Nvidia is now creating record highs. If we go back to the 3-screen setup and do an overall analysis, what the setup that I have here, what it allows me to do is very quickly pinpoint high probability stocks and assets for the portfolio within seconds. I do not want to be looking at these charts and staring at these charts to often try and find a reason to trade a chart when it's not there. A good chart should tell you within 3 seconds whether it's tradable. A bad chart should also tell you within seconds whether it's not tradable. You should not be staring at charts to find opportunities. The chart should be screaming at you to say, hey, either trade me or stand aside. And remember, guys, standing aside is also a position, something that people tend to overlook. So going back to the 3-screen setup, let's do an overall analysis here. Looking at Nvidia, is it above the highest points of last year? Yes, it is. Is it currently in a trend? Yes, it is. Does it have a performance history of trends? Nvidia clearly does. It's got 3 major uptrends in its history. Is it above all of these key levels of support and resistance, these red and green lines? Yes, it is. So overall, Nvidia is looking bullish. Now that it's printing new highs and it's continuing to push to the upside, where is it likely to move towards? That's where round numbers come in. $200, $250, $300, and so on. And moving to the weekly time frame, I'll just leave it as it is. The weekly time frame, very clearly overall, it's bullish. It's above the 200 simple moving average. It's above the 50 simple moving average. And the trend filter is predominantly green and gray, mostly green. As it trends, you'll see mostly green. If it goes through bits of correction or consolidation, it may turn gray. But overall, we want to see predominantly a green trend filter. And if we come down to the daily time frame, we have that alignment where Nvidia is trading above the 200, the 50, and the 20 simple moving averages. The trend filter in recent days, certainly since September, has settled into a nice trend where the 20 simple moving average is being used as a support level, and the trend filter has remained green and gray through this move to the upside. Okay, so with that setup in mind, let's look at a few other big tech stocks to see how they are setting up compared to Nvidia. So let's start with Apple. Okay, so if we look at Apple, starting with the monthly, going to the weekly, coming down to the daily, we can see that Apple is trading above the highest point of last year. So it has a bullish bias. Of course, it's Apple. It's been around for decades. It has a proven history of performance, consistently rewarding investors who play the long game. If we come to the weekly time frame, it's above the 200 moving average, which is the black line. It's above the 50 simple moving average, but it's currently settled into a consolidation. We can see that it's moving sideways. The trend filter is alternating between green and gray. And if we come down to the daily time frame, we can see that the daily time frame is confirming the consolidation we just saw on the weekly time frame. How is it doing that? Well, first of all, overall, it has a bullish bias. It's above the 200 simple moving average. However, if you look at the colored bars, you'll notice that they're green, gray, and red, confirming a sideways market. But also notice how flat the moving averages are. The 20 and the 50 simple moving averages are flat. What we want is them to be angling up, confirming that the market is moving up. Like we saw in Nvidia, the moving averages are moving up. Currently on Apple, they are flat. So we're very much in a sideways market for now. Okay, let's look at Google. Okay, Google's looking fairly interesting, although again, still requires a bit of patience. First of all, it's trading above the highest point of last year. It's also trading above its all-time high. Currently though, we can see that it's in a bit of a consolidation. We can see that in more detail on the weekly. What's good is that it's above the 200 and the 50 simple moving averages. The trend filter has turned green in recent weeks, but it hasn't broken above its all-time high. So for now, it's still inside an area of consolidation. And again, we can see that in more detail on the daily. Currently, the trend filter is green. It's above all three moving averages, suggesting that the bias for now is bullish. However, it's still inside a larger area of consolidation. What we want to see is a break and close above the current all-time high of July to suggest that the trend has started and that Google is worth taking a position on. For now, getting in would be an aggressive entry, but it would mean remaining inside this sideways market for now. That's the potential challenge if you get into Google right now. You've got the aggressive entry, you've got the conservative entry. You have to decide which is the right one for you based on what you're seeing here on the charts. Okay, let's look at one last stock. Let's look at Meta. Okay, Meta has been on quite a ride in recent months. If I just open up the monthly time frame, we can see that since this low in November 2022, Meta has been on a massive uptrend, recovering from the struggle that it faced back in 2022. So Meta has done very, very well, and it's now printing new all-time highs. It's above the highest point of last year. Of course, it has a performance history that investors would be happy with. Now, looking at round numbers, we're looking at potential $600, $700, $800, $900. Even that $1,000 mark could be a potential target for Meta. Moving to the weekly, quite straightforward. It's above the 200, it's above the 50 simple moving averages on the weekly. The trend filter overall is green, although there are bits of gray in there, which we expect. And then finally, if you come down to the daily time frame, we can see that it has an overall bullish bias because it's above the 200 simple moving average. But currently it's in a bit of a mini consolidation, not a huge consolidation. It's in a bit of a mini consolidation. We can see that the 20 simple moving average and the 50 simple moving averages are fairly flat. The bars are alternating between green, gray, and red, confirming that we are in a consolidation. What we want to see now is a breakout to the upside. Once we get that breakout and the stock starts moving through $600 towards $700, we have a trend in play, and that could be a time to potentially consider an entry. This 3-screen analysis is how I identify every single stock, commodity, or currency that makes it into our portfolio. Spotting profitable stocks is one thing, but it's crucial to avoid the mistakes that 80% of investors make, which will lead to wiping out their trading accounts. Watch this video to learn what these mistakes are and how to avoid them.